Tensions rise as the geopolitical landscape shifts and economic indicators reveal troubling trends. From inflation warnings to corporate mergers, today's news highlights a world in flux. Here are today's top 10 stories you need to know. Recent major mergers have begun to reshape the business landscape, with companies consolidating to enhance their market positions. These mergers reflect a strategic response to competitive pressures in various industries. Analysts are observing how these changes will impact market dynamics, consumer choices, and regulatory environments. The implications of these mergers extend beyond the companies involved, influencing industry standards and practices. As businesses continue to adapt to evolving market conditions, the focus will be on how these mergers will affect innovation and customer service. Industry experts are predicting that this trend of consolidation may accelerate in the coming months. Stakeholders will need to stay informed as these developments unfold, shaping the future of commerce and competition. Oil prices have experienced significant volatility amid ongoing supply concerns and geopolitical tensions. Market analysts are closely monitoring developments in key oil-producing regions, as any disruption could lead to price spikes. The fluctuations in oil prices are indicative of the broader energy market's sensitivity to global events. Investors are advised to remain cautious as supply chain issues could impact energy costs. The situation is further complicated by changing demand patterns and regulatory changes in various countries. As nations navigate their energy strategies, the impact on oil prices will be a critical factor for both consumers and businesses alike. Keeping an eye on these developments will be essential for understanding the future of energy markets. As the geopolitical landscape continues to shift, the oil market will likely remain turbulent. The stock market has presented mixed signals as the second half of the trading year begins. Major indexes, including the Dow Jones and the S&P 500, have shown fluctuations in response to economic news and investor sentiment. While some sectors, particularly technology, have seen gains, others remain under pressure. The volatility reflects the uncertainty in the market as investors weigh economic indicators and corporate earnings. Analysts suggest that this mixed performance is indicative of a broader trend as the market navigates through various economic headwinds. As corporate earnings reports begin to roll out, investors are keen to assess the impact of these results on market dynamics. The forthcoming data could provide clearer insights into the market's direction. As the trading landscape evolves, staying informed on market trends will be crucial for investors. Market participants are bracing for the release of crucial economic data that could indicate the health of the U.S. economy. The Consumer Price Index report, set to be released on July 14th, will provide insights into inflation trends and consumer spending. Analysts are particularly focused on how these figures will influence Federal Reserve policy decisions in the coming months. With inflation being a chief concern for many, the upcoming data will be a key indicator of economic stability. The Fed's response to this data could impact interest rates and, by extension, the overall economic landscape. Investors are preparing for volatility as they anticipate the reactions of markets to the new information. As the economic climate continues to evolve, the focus on data-driven insights will remain paramount for decision-makers across various sectors. The implications of this report may set the stage for future monetary policies and economic strategies. As global tensions rise, the Eurasia Group is preparing for the upcoming NATO summit, where key geopolitical issues will be discussed. The summit is expected to address various challenges facing member nations, including security threats and economic stability. Analysts predict that the discussions will have significant implications for international relations and defense policies. With ongoing conflicts and geopolitical uncertainties, the summit could serve as a platform for member states to reaffirm their commitments to collective security. This meeting comes at a crucial time as nations grapple with the implications of recent global events. The outcomes of the NATO summit will be closely watched by analysts, policymakers, and the public alike. As NATO leaders gather to strategize, the world will be observing how they navigate complex geopolitical landscapes. The summit's decisions could shape alliances and influence global stability for years to come. Amazon is reportedly planning to raise $25 billion through a bond sale, a move that underscores the company's ongoing efforts to finance its expansive operations and investments. This significant capital raise comes as Amazon continues to navigate the competitive e-commerce landscape while also investing heavily in technology and infrastructure. Analysts suggest that the bond sale could be used to fund various initiatives, including logistics improvements and technological advancements. The bond market remains a vital source of funding for corporations, and Amazon's strategy reflects its commitment to maintaining a strong market position. As interest rates fluctuate, the implications of this bond sale on Amazon's financial health will be closely monitored by investors. The success of this initiative may also influence other companies considering similar fundraising efforts. With the retail environment evolving, Amazon's proactive approach to securing capital could set a precedent for how large corporations manage their financial strategies moving forward. Coursera has officially completed its merger with Udemy, marking a significant consolidation in the online learning sector. This merger aims to enhance operational efficiencies and streamline offerings across both platforms. However, as part of the integration process, Coursera announced a workforce reduction initiative that began on July 6th. The company expects to incur costs of $8 to $11 million related to severance and benefits in 2026. This decision underscores the challenges faced by companies in the tech sector as they adapt to changing market demands. The merger is seen as a strategic move to leverage both companies' strengths in the burgeoning online education market. Analysts believe that this consolidation could lead to a more competitive landscape, potentially benefiting consumers through improved services. As the online education sector grows, the focus will be on how Coursera and Udemy integrate their operations effectively while maintaining quality for their users. The coming months will reveal how this merger impacts both companies and the broader industry. Tata Consultancy Services, India's largest IT services company, is set to announce its financial results for the first quarter of 2026 on July 9th. This highly anticipated report is viewed as a critical indicator for the broader technology sector in India, which has faced significant challenges in recent months. As companies worldwide grapple with economic uncertainty, TCS's performance will provide insights into the health of IT spending, particularly in artificial intelligence initiatives. Investors are particularly focused on TCS's commentary regarding client expenditure trends and operating margins, especially given the fluctuations in North American discretionary spending. With many organizations tightening their budgets, how TCS adapts to these pressures will be closely scrutinized. The company's ability to maintain profitability amidst global economic volatility could influence investor sentiment and set expectations for its competitors. Furthermore, TCS's results may highlight emerging opportunities within the technology landscape, particularly in AI and digital transformation projects. As the first major IT firm to report this season, TCS's findings will be pivotal in shaping market perceptions and investment strategies in the coming months. Investors will be looking for clear indicators of resilience or potential setbacks. In a notable development on Wall Street, Meta Platforms has seen a significant surge in its stock price following reports of its ambitious plans to expand into artificial intelligence services. The company's shares jumped as much as 8% as investors reacted positively to the news. This stock rally highlights a broader trend where technology companies are increasingly investing in AI to enhance their offerings. Meta's strategy aims to capitalize on the growing demand for AI technologies, which could position the company as a leader in the space. With AI applications becoming integral to various industries, Meta's foray into this arena is both timely and strategic. This rally comes amidst a mixed performance across major stock indexes, with the Nasdaq showing resilience despite broader market volatility. Investors are particularly keen on how Meta's investment in AI could drive future revenue growth, especially as the company seeks to diversify its income streams beyond social media advertising. Analysts are watching closely for quarterly earnings reports that could provide further insight into the company's financial health. As the AI landscape evolves, Meta's initiatives will likely have far-reaching implications for the tech industry and its stakeholders, potentially setting new standards for innovation and competition. Looking ahead, Meta's commitment to AI could redefine its market position and influence the entire tech ecosystem. U.S. Federal Reserve Governor Christopher Waller recently addressed the growing concerns over inflation during an economics conference in Rome. He emphasized that the risks in the U.S. economy are increasingly tilted towards higher inflation despite a stable labor market. This warning comes on the heels of a disappointing June jobs report, which revealed weaker than expected hiring figures, although the unemployment rate fell from 4.3% to 4.2%. Such mixed signals highlight the complexity of the current economic landscape. The upcoming Consumer Price Index data, due on July 14th, will be pivotal in determining the trajectory of inflation. The Fed's focus on inflation is critical as it prepares for a key meeting later this month where policy decisions will be made. These decisions will significantly influence monetary policy and overall economic stability. Investors are particularly anxious about how persistent inflationary pressures may affect interest rates, potentially leading to tighter financial conditions. With the potential for inflation to disrupt the fragile economic recovery, the Fed's strategy will be under intense scrutiny in the coming weeks. As we approach the release of crucial economic data, market participants will closely monitor the central bank's response to inflation, which could shape the economic outlook for the remainder of the year and beyond. Thank you for watching today's top stories. Which news item shocked you the most? Don't forget to like, subscribe, and stay informed.